Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. Today, we're doing a critical deep dive. We've got 4 key updates from the small cap space: gold production, some exciting exploration, and clean tech too.
Right. And we're really adopting that breaking news approach here.
Exactly. Cutting straight to the chase, focusing only on the hard financial numbers, the technical results, basically the stuff that, compels you as an investor to dig deeper.
Yeah. Our mission is really to break down these announcements for you, the listener, tell you what milestone was hit, and crucially, why it actually matters for the company's prospects, for their bottom line.
And it's interesting, the 4 companies today, they've each hit quite different milestones, haven't they?
They really have. It's like a snapshot across the sector. We've got technical de-risking for one, massive scale and exploration for another, a company hitting a financial turning point, and another showing real capital efficiency.
So we need to look past just the headlines.
Definitely. Let's drill into the dollars, the meters, the technical implications.
Okay, let's kick things off with a company moving towards actually producing gold soon. Headline news flash. ESGold confirms final processing methodology as construction nears completion. That's ESGold Corp, trading on the CSE, symbol ESA.
Right, ESAU. And look, for any company getting close to production, figuring out exactly how you'll get the gold out, that's maybe the biggest technical hurdle.
So confirming this process is significant. Tell us about that.
It's a major de-risking event structurally. You absolutely need your metallurgy sorted before you flip the switch. And the key thing here is they've formally validated the Merrill Crowe closed circuit.
Okay.
And importantly, that's validated for all their material, including those railway tailings they have.
Now, Merrill Crowe, for those of us not deep in metallurgy, what does confirming that specific circuit actually, mean in practical terms? How does it de-risk things?
It means certainty. That's the big word here. Merrill Crowe is, well, it's a very standard, proven process. It's known for high recovery, especially with the kind of lower grade, fine material they might encounter.
So it's reliable tech.
Exactly. They're not reinventing the wheel. They've confirmed that this industry standard process works perfectly for their specific ore. It just removes a huge technical variable right before the final push.
Got it. So connect that technical piece to the bigger picture for ESAU.
Well, it means they're now fully funded to finish construction. They're on a clear path, a validated path, towards 2026 production. And this isn't just on paper, right?
Right.
Construction is actually moving ahead of schedule. The main mill building is already nearly complete. You can see the progress.
Okay, so that structural certainty plus the metallurgical certainty.
Yeah.
That's really the key takeaway for anyone tracking their timeline and their capital spending.
Absolutely. And the CEO, Gordon Robb, he kind of underlined this. He said the confirmation work gave them, and I'm quoting here, exactly what we needed: confirmation of the correct processing path before finalizing our equipment procurement.
Yeah, getting that equipment order right before you buy, that saves a lot of potential headaches and delays, doesn't it?
Huge potential cost overruns and timeline blowouts avoided right there. It's disciplined project management.
All right, let's shift gears now. From near-term production to pure exploration, but exploration that's hitting scale right near the surface. Breaking drill results. West Point Gold extends near-surface gold at Arizona project, eyeing maiden resource. That's West Point Gold Corp, trading over on the TSXV venture, symbol WPG.
WPG, yeah. And some of the numbers in this release really do jump out at you.
They certainly do. What specific results from their gold chain project, the Tyro Main Zone, should listeners really zero in on here?
Okay, the main thing is the sheer scale and continuity they're showing. The absolute highlight, that's whole GC 2570. It returned, get this, 82.4 meters, grading 1.61 grams per ton gold. And the kicker, it starts literally at surface.
82 meters from surface, wow.
Right from the top. And what makes it even stronger, thinking about a potential resource, is the core within that long run. They hit 9.1 meters, averaging 8.37 grams per ton gold.
Okay, so you've got the bulk tonnage potential with that long intercept and a high-grade kicker inside it.
Exactly. That combination length, continuity, decent grade overall, plus high-grade zones, that's what you look for in potentially large, valuable deposits.
And you mentioned from surface. That has a pretty immediate impact on how you think about a project, doesn't it? The release notes mineralization starts at surface in all 4 holes they highlighted. What does that mean economically?
Oh, it changes the economics,
Yeah.
potentially quite profoundly. That's the so what for you as an investor. Surface mineralization immediately puts an open pit scenario front and center.
Right, much cheaper to start than underground.
Way less upfront capital, your capex is lower. You don't need all the complex underground development initially. You're not potentially spending years stripping away waste rock before you even get to the ore.
So you could get to the valuable stuff faster, maybe generate cash flows sooner.
That's the potential advantage. It significantly lowers that initial financial barrier to getting started.
So this drilling, it's not just finding gold, it's strengthening the case for a potentially lower cost mine down the road.
Precisely. It provides that grade width continuity you absolutely need for a resource estimate, and they're clearly moving towards that maiden resource. They've got, 9 more holes, about 725 meters, still at the lab waiting for assays.
So more news potentially coming soon.
Yeah, they're building momentum, and they're building it right from the surface, which is the ideal starting point, really.
Okay, complete pivot now. We've done processing certainty, we've done near-surface gold. Let's look at clean tech, and specifically how disciplined growth can lead to a real financial turning point. Financial milestone alert. Stardust Solar posts first ever EBITDA positive quarter on record sales, signals path to profitability. This is Stardust Solar Energy Inc., trading on the TSX Venture symbol SUN.
SUN, yeah. And look, for any company focused on growth, hitting positive EBITDA, that's not just an accounting line. It's kind of proof the business model is working.
It validates the strategy. So what were the key numbers in their Q3 2025 results that, marked this turnaround?
Well, the results really show a business gaining operational leverage. First off, record revenue. $1.78 million. That's almost double year over year, up 99%. Huge growth.
Wow, doubling revenue. But did margins suffer? Often happens with rapid growth.
That's the key point. They didn't. Their gross margin actually expanded significantly. It went from 31% a year ago up to 44% this quarter.
31 to 44%. That's a big jump.
It's a very healthy margin. And that margin expansion is what really fueled the operational breakthrough. The headline number, first ever positive EBITDA, coming in at $16,293.
Okay, so operationally, the core business is now paying for itself.
Correct. And that flowed through to the bottom line, too. Their net loss shrank dramatically down to only $25,018. It just shows clear, tangible progress towards actually being profitable consistently.
That's impressive scaling. What's behind that? What allows them to nearly double revenue and boost margins like that? Is it their model?
It really seems to be their asset-light franchise model. They scale up their reach, their installer network, using franchisees, so they don't have to carry the high fixed costs of, say, managing huge installation crews everywhere themselves.
Okay. So
Yeah.
capital efficiency.
Exactly. That translates into better margins. And this model is also driving serious sales momentum. Signed contracts in just Q3 hit a record $2.55 million.
Which does what for their future visibility?
It boosts their total backlog work already signed up to $4.4 million. That gives you really strong line of sight on where revenue is likely headed in the near term.
4.4 million in backlog is solid.
Yeah.
And there was something about cash flow too, wasn't there? Liquidity.
Yes, really important detail. Beyond the positive EBITDA, they actually generated positive operating cash flow this quarter. $131,000. That's the first time since they listed.
Cash flow positive, EBITDA positive, record revenue, expanding margins. Sounds like a good quarter.
It really does. And the CEO, Mark Tadros, basically confirmed this focus. He said, Q3 proves our model is scaling with discipline. And then he added, most importantly, our net loss narrowed to just $25,000 with positive operating cash flow, showing clear progress toward consistent profitability.
That focus on discipline alongside growth.
Yeah.
That's what investors want to see, right? Sustainable scaling.
Absolutely. Especially in today's market.
Okay, let's wrap with, frankly, a fascinating model. Capital independence, but in the exploration sector. Gold, purity, and profitability. Extra gold turns a profit and tightens its balance sheet as higher gold prices lift Q3. This is Extra Gold Resources core ticker XTG on the main TSX board.
XTG, yes. And this really is a unique setup. They're an explorer, primarily, but with this intense focus on financial stability, even profitability.
So how are they managing that? What are the core numbers showing that stability?
Well, first off, they post a net income. An explorer posting net income of US $2.27 million after tax for Q3 2025. That's notable itself.
Yeah,
but maybe the bigger story is the balance sheet underpinning it all. The company operates with zero debt. None.
Zero debt.
And they have total assets of US $19.33 million. Having no debt just gives you enormous flexibility and resilience, against market swings.
Absolutely. So where does the money come from? How do they fund drilling with no debt?
That's the unique part, their self-funding mechanism. All their exploration, including running 3 of their own diamond drill rigs, it's all funded internally
Internally.
from selling gold. They have gold recovery operations in Ghana alongside their exploration. In the first 9 months of 2025, they sold 3,391 ounces of fine gold. And they got a great price for it, too. Average realized price was US $3,168 an ounce.
Wow. So they're essentially using cash flow from small-scale production to pay for the drilling that finds more gold.
That's exactly it. Low-cost recovery funding higher-value exploration drilling.
Now, that's incredibly rare for a junior explorer funding everything themselves. Does that, I don't know, distract from pure exploration, or is it a genuine strategic edge because they avoid dilution?
Oh, I think it's a major strategic advantage, especially when you layer in their efficiency. The company estimates their discovery cost is incredibly low, around US $10 per ounce of gold defined in the ground.
$10 an ounce discovery cost. That's
Very low. It's remarkably low. And because they use internal cash, they simply don't need to go back to the market constantly, issuing shares, diluting existing shareholders to fund work programs.
yeah, they sidestep that whole cycle.
They completely sidestep it. They're funding future potential discoveries with cash generated today.
And is that financial strength translating into results on the ground? Are they actually finding more gold?
It seems so. Management reported finding multiple new potential gold shoots near their existing resource areas. So that suggests immediate technical progress, finding potentially higher grade or thicker zones, and it's all backed by that self-sufficient zero debt balance sheet.
It really is a sustainable model built on financial discipline. Very interesting.
Quite unique in the space. Hashtag tag outro. So yeah, we've covered quite a bit today. 4 really compelling but different stories of progress in the small cap world. You had ESO significantly de-risking their project technically, paving the way for production certainty.
Right. Then WPG hitting those massive near-surface intercepts, which really helps the potential economics, lowers that CapEx hurdle.
Exactly. Then SCN, the clean tech company, achieving that critical financial inflection point through disciplined scaling, positive EBITDA, positive cash flow.
And finally, XTG, with that unique exploration model, funding everything internally, building a fortress balance sheet.
Right. 4 distinct paths, but all showing significant positive developments.
And I think the key takeaway for you, the listener, is these specifics matter. The actual drill intercepts, the margin percentages, the debt levels, the cash flow figures.
Yeah, those are the hard data points. That's what helps you separate, real research from just reading headlines. If you're looking to do a deeper dive, these are the kind of facts you need to focus on.
Definitely.
And maybe a final thought to leave you with, thinking about Extra Gold's Q3 results. Funding, drilling internally, zero debt. It does raise an important question, doesn't it?
Go on.
When you're assessing risk, especially in the resource sector right now, how much more durable, how much more attractive, perhaps, is an explorer that doesn't need the market? One that can fund everything from internal cash flow and a strong balance sheet, compared to companies constantly needing to issue equity, needing to dilute?
That's a great question. How do you weigh that financial self-sufficiency against, say, maybe faster exploration progress funded by dilution?
Exactly. That's something for you to consider for your deeper research. How much is that financial independence worth in today's environment?
Excellent point.
Yeah.
Okay, that wraps up our deep dive for today, focusing on the breaking news and the hard numbers driving these small cap companies.
Yeah, hopefully that gives you a good starting point.
We definitely encourage you to check out the source materials yourself. Thanks for tuning in, and we'll talk again soon.